a value add equity play, allow yourself to get into a position where you can continue that strategy of burning out of something, refinancing after renovating, and continuing to repeat that cycle. But of course, along the way, we've injected new capital. Very excited about what we're doing, and constantly looking to continue to increase our passive investment ability to earn, so that eventually the active can become substantially less.
So there's so much to unpack in everything you just said. Buying at a discount, I would, or not make the assumption, but certainly hear more often than not that anything that's worth buying is probably already been either forced appreciated, the value add has already been done. How are you finding assets that even today are still poorly managed, not picked over, not already had somebody else come in and done exactly what you want to do?
Well, it takes a long time to build the relationships out. So since 2015, when we really started intentionally going after multifamily value add assets, picked a few criteria, some 2% rules, and target markets to dive deep into. Then I started to recruit other people. So using my ability to show, here's what I made in real estate last year on 1099. Why don't you come and do this for me? This is what we're looking for. You eat what you kill. So you bring it to me, I'm going to buy it. And then if it looks good, at least, of course. And we're just going to turn over as much inventory as we can. There is a lot of real estate in the United States of America. In our target markets, there are 7 states in total that we're going after. And we're really hitting it hard. So that allows us to turn up, from title lists, direct to seller, wholesaler, broker connections, a lot of options to look at. And a lot of people use a rule of thumb for one property you get under contract on and close on, probably looked at 200 deals. That's very accurate. It's just you're sifting through a lot of garbage, a lot of people that don't have the right sales price expectations, their value is not substantiated by their NOI against the market cap rate, and are looking to sell it for a higher price than what it's worth. But we're just not that buyer. So the combination of the diligent looking and then patience and understanding that we know what our numbers are going to dictate in terms of the sales value of that property. So I'm going to present that, and then I'm going to wait. What often happens is that the seller will engage other buyers that will just give them what they want up front, then try to retrade. And there I am, just Mr. Consistent, holding the same bag of money offered in the beginning. When the seller comes back and says it didn't work out, the transaction failed, are you still interested?
What's it been like? I mean, that's an entire process and business in and of itself of having the deal sent to you, however it is that you set up those relationships, whether that's with a wholesaler, whether that's with a broker, or whether it's your own direct to seller leads that you've generated, to bringing that across your desk, reviewing the deal, and then putting it in some sort of follow-up CRM system where you say, oh, wait, you offered on this, and then circling back in 30 days. I mean, that's a lot to keep up with. Tell me about that system. And what are some keys, I guess, that you've found to really making that thing work?
We've used several CRM systems over the years, but I think the key has always been in the individual. So some of the best people that are procuring property out there, I call them my acquisition specialists. They're looking for exactly what I want to buy, and they're only bringing me what meets my criteria. So they have systems that are built in for themselves. So what I've leveraged on is not a specific system that I created and that I've implemented and allowed everybody else to use. I've leveraged other people's. So they have their own unique way of interacting, keeping track of their people, and trying to engage sellers to sell. And once it rises to the top, I'm looking at it to make that ultimate decision about whether to acquire or take the next step. But in the middle, they're taking all that workload on just to get to the end where they can close on something with me and get paid. But the organization and the system of it is widely up to them. For the start, I really did focus on trying to create my own wheel, but I realized it just wasn't fast enough, and I could do a lot more with other people that had already done the same thing, not recreating what they have already created, and being able to build and expand upon that. Just simply offering them a resource that they knew would buy as long as the criteria was met.
Right. And so I understand, obviously, working directly to seller, like that's a method we've certainly employed. I understand working with brokers. Working with wholesalers, though, inside of the multifamily space has got to have some nuance to it. Am I right in saying that?
It's got a lot of nuance, and it's hard to understand who actually has the right to purchase the property. It can get daisy changed 3 or 4 times and have hundreds of thousands of dollars of commission paid to wholesaler, or assignment fee paid to wholesaler as part of the deal that makes the deal impossible. So it certainly does depend. It doesn't always work out, but they're a valuable resource because they are doing a lot of hard work out there and ultimately bringing things to sale that are not otherwise available.
How do you know when you're dealing with a professional in the wholesaling space or just another hack? Because there's plenty of hacks that are just, and again, it got to the point in the single family space back when I used to do single family, where it was just like, just don't send me anything else because if it's just so much of it's garbage. How do you filter through that?
Quick filters that I teach all my guys and gals is the rules of thumb. Simple things you need to pay attention to. Most folks have heard about the 1% rule. For every $100,000 that you purchase a unit for, you have to have $1,000 in gross rent a month in order to meet that rule. So that's a simple standard. Then plugging it into underwriting and going a little bit deeper into analysis after hitting a few of those rules will allow us to see if the math is making sense. And if it does, then we're going to pursue it. Once we start to work with the wholesaler and engage them, we're always making a property visit, which is the fun part, because the wholesaler is not going to spend the money to get there. So we're going to meet directly with the seller. And that's when we start unpacking a lot of things that we didn't know about because that weren't disclosed to us from the wholesaler, either from them not knowing or them not wanting to say, which includes assignment fees and what the seller is getting out of the deal and things of that nature. That gives a lot of leverage. I don't want to shortcut anybody.